Here is the expanded, high-value, and technically rich version of your input. I have maintained your exact headings but deepened the content with transaction codes, T-codes. Configuration specifics, T-code, VOV7 and VOV4. And senior-level implementation advice. 11. Item category controls and determination. Item category is where SAPSD decides what actually happens to an item. You can think of the sales document type as defining the container, the legal agreement. But the item category defines the behavior of each individual line item inside that container. In real projects, when a user reports greater than, the order is correct, but the delivery is blocked, or the billing is for the wrong amount, greater than the root cause, is almost always item category configuration, T-code, VOV7. A senior SD consultant treats item category configuration as surgical precision work, while the sales document type sets the broad rules, like this is a return. The item category executes the specifics, like this specific screw needs to go back to stock, but this service fee does not. What is an item category, conceptually? The item category, VBAPPSTYV, is the control key that dictates the logistics and financial execution of a material or service within a document. It determines logistics, whether an item is picked, packed, and shipped, LIPS table relevance. Finance, whether an item generates an invoice and posts to accounts receivable, VBRK table relevance. Inventory, whether it consumes stock or is purely a text description. Pricing, whether it costs money, is 100% discounted, or uses a special pricing procedure. Costing, whether the cost of goods sold, COGS, is determined from the material master. Structure, whether it is a simple item, a bundle, BOM, or a value-add service. Crucial rule, every line item in every sales document has exactly one item category. If SAP cannot determine an item category, you cannot save the order. Item category controls. Item category controls, configured in VOV7, define how an item behaves. This is where you toggle specific functionalities on or off for that specific item type. Below are the critical control fields you must master. Billing relevance. This field, TVAPFKREL, is perhaps the most frequent source of errors in the order-to-cash (OTC) cycle. Defines whether billing is allowed. Does this item generate revenue? When billing happens, is the invoice triggered by the order, service, or the delivery, goods? Status updates, how the system updates the billing status in the document flow, VBUK. Critical configuration values, a delivery-related billing, the standard for physical goods. You cannot bill until you ship, post-goods issue. B. Order-related billing, the standard for services or credit memos. You bill based on the order quantity immediately. C. Order-related billing, status. Used when you want to bill based on the order, but the status is only updated if the entire quantity is billed. F. Order-related billing, status, and QTY, often used for third-party scenarios, TAS. I. Order-related billing, billing plan, used for milestone billing or periodic billing, example, rent or subscription. K. Delivery-related billing, partial QTY, allows billing partial deliveries correctly. Wrong billing relevance causes, greater than billing document not created errors. T-code VF01 returns no billing documents generated. Greater than duplicate billing. If set to be for a physical good, you might bill the customer before shipping and then accidentally bill them again if someone tries to bill the delivery. Delivery relevance defines whether a delivery document can be created for this line item. Configuration blank. No delivery, the item stays in the sales order and moves directly to billing or nowhere. Common for credit memos, debit memos, and pure services. X delivery allowed. The item is copied into the outbound delivery, VL01N, Senior Insight, Service Items, example. Consulting hours usually have no delivery relevance because you cannot pack an hour of consulting. Exception, sometimes specific services like installation are made delivery relevant so they appear on the delivery note for the customer's reference, even if they have no weight or volume. Pricing relevance defines whether pricing is active in the sales order, whether the item is free or statistical. Configuration values, X standard, pricing runs normally. Surcharges, discounts, and taxes apply. B. Free of charge, pricing runs, but the net value is forced to zero, 100% discount. A statistical, pricing runs, but the value is not added to the order total, used for information only. Incorrect pricing relevance causes zero price. If accidentally set to B, the company loses revenue. Incorrect revenue posting. If set to A, the value want post to FI, financial accounting. Item category type. This field helps classify the item for other system checks. Examples: blank, standard item. B, text item, no stock, no pricing, just info. L, stock item, triggers inventory checks. A, value item, value-based, not quantity-based. This controls stock behavior, validating if the material type is compatible with the process. Copy control, preventing a text item from triggering a credit check. Business item category, used for statistical reporting, aggregating data in BW, business warehouse or LIS, logistics information system. Business analysis, differentiating between consulting services and repair services, if they share the same material number but use different processes. Note: this is rarely used in modern S/4HANA projects, but exists in many legacy ECC systems. Schedule line allowed. This checkbox is a massive go or no-go switch for logistics. Defines whether schedule lines are allowed for this item category. Schedule lines control delivery dates. When can we ship? Confirmed quantities. How much do we have? Availability check, ATP. Is the stock physically there? Movement types. How does inventory move? Example: 601 versus 633. Critical rule. Greater than no schedule line equals no delivery. Greater than. Greater than even if delivery relevance is checked. If schedule line allowed is unchecked, the item cannot be delivered because SAP doesn't know when or how much to ship. Return item indicator. Controls whether the item is return relevant. Used for returns, RE. Triggers the credit logic instead of debit logic. Reporting. Separate sales from returns in standard reports. MC+E. Advanced returns management, ARM. Triggers the specific inspection and refunding workflows in S/4HANA. Pricing control flag. Controls whether manual price changes are allowed. Can the sales representative overwrite the automatic price? Calculated versus statistical. Is this price just for show? Misuse causes pricing disputes. Sales reps giving unauthorized discounts because the field was left open. Audit issues. Auditors finding manual overrides on locked price lists. Relevant for credit. Defines whether the item value contributes to credit exposure. Used in standard orders, yes, protects cash flow. Free goods or samples, no. Giving away free items should NT block the customer's credit limit, although some companies argue it effectively consumes marketing budget. Returns, no, returns technically increase the customer's credit availability. Item category determination. Item category determination, configured in VOV4, is the logic SAP uses to decide which item category is assigned automatically when a user enters a material. Since users do not manually type TAN or TAS, SAP must calculate it. This determination is based on 4 inputs: order type plus item cat group plus usage plus higher level item cat. 1. Sales document type. Defines context. Is this an order? OR. Is this a return? RE. Is this a free of charge delivery? FD. 2. Item category group. From Material Master. Defined in Material Master, MM03, Sales Org to View. This tells SAP what the material is physically. Examples: norm, standard stock material. Example: laptops, phones. DIEN, service material. Example: consulting, warranty. Bands, third-party item. Example: drop-shipped goods. LEIS, non-stock service. VERP, packaging material. Senior insight. This field is material-driven behavior control. A laptop, norm, behaves differently than support hours, DIEN, even inside the same sales order. 3. Item usage. Optional. Used in special scenarios where the code triggers a specific behavior. Free. Triggered by the free goods condition technique. Buy 10, get 1 free. Text. Triggered if the item is a text line. CHN. Triggered in batch split scenarios. 4. Higher level item category. Optional. Used for hierarchies in BOMs. If you sell a computer bundle, parent, the mouse, child, inside it might behave differently than if you sold the mouse alone. Input, the item category of the parent item. Standard item category examples. Item category description, typical usage, billing relevance, delivery relevance. TAN standard item, selling physical goods from stock. A. Delivery related, X, yes. TAN free of charge item, buy 1 get 1 free child items. Blank, no billing, X, yes. TAS third-party item, selling goods shipped directly by vendor to customer. F. Order-related, blank. Number TAD service item consulting, training, labor. B. Order-related, blank. Number TATX. Text item notes, instructions, blank blank. KLN return item, returning goods to warehouse. B. Order-related credit, X. Yes. Inbound. LUMF, BOM, main item, selling a kit where pricing is on the components, blank X, yes. URLA, BOM, header item, selling a kit where pricing is on the header. A. Delivery related, X, yes. Senior insight, knowing codes is less important than knowing behavior. A consultant who knows why TAS behaves like TAS is valuable. A consultant who just memorized the code is not. How item category impacts SD processes. 1. Delivery creation. Constraint. The item is only copied to VL01N if delivery relevance equals X and schedule line allowed equals X. Impact. If either is missing, the warehouse never sees the order. 2. Billing creation. Constraint. The billing list, VF04, only picks up items based on their billing relevance. Impact. If you use B, order related, for a stock item, you might bill the customer before you even have the stock to ship. 3. Stock posting. Constraint. Stock is reduced. Goods issue, only if the item category allows a schedule line, which determines the movement type, example, 601. Impact. Text items, TATX, and service items, TAD, never touch inventory levels. 4. Account determination, VKOA. Constraint. Revenue is posted to GL accounts based on the account assignment group of the material, but only if the item category is relevant for pricing and billing. Impact. Free goods, TAN, usually do not post revenue, or they post to a specific sales promotion expense account. Real project scenarios. Scenario 1. Service sale, consulting. Doc type, OR, standard order. Item cat group, DIEN, service. Determined item cat, TAD. Behavior, no delivery created. Billing happens immediately after order save. No stock check performed. Scenario 2. Free goods, promotion. Doc type, OR. Item cat group, NORM. Item usage, FRE, triggered by free goods config. Determined item cat, TANN. Behavior, delivery is created so we can ship it. Pricing is active but 100% discounted, R100. No revenue generated. Scenario 3. Text item, user note. Doc type, OR. Item cat group, NORM. Behavior, user manually changes item category to TATX. Result, no delivery, no billing. It serves as a printed note on the acknowledgement for the customer. Common real project mistakes. 1. Using TAN for service materials. Result, the system expects a delivery. You cannot ship the service, so the order gets stuck open forever because the delivery is never done. 2. Wrong item category group in material. Result, setting a laptop as DIN, service. The system tries to sell it without checking stock. You sell 100 laptops you don't have. 3. Overriding item category manually. Result, sales reps changing a standard item to free of charge manually because permissions weren't locked down. 4. Copying item category without understanding. Result, creating a custom ZAN category but forgetting to tick schedule line allowed. The business goes live, and no one can ship anything. 5. Ignoring schedule line relevance. Result: trying to debug why a delivery isn't creating. Checking every setting in VOV7, only to realize the schedule line category wasn't assigned in VOV5. How senior consultants debug item issues. When an item behaves strangely, follow this trace path. 1. Check sales document type. VOV8. Is the container correct? 2. Check material master MM03. What is the gen item cat group? Sales to view. 3. Check item category determination. VOV4. For this stock type plus material group, what item category is SAP selecting? 4. Check item category controls. VOV7. Go into the detail. Is schedule line allowed checked? Is billing relevance correct? 5. Check schedule line determination. VOV5. Does this item category assign a valid schedule line example? CP. Pro tip: never debug pricing or delivery first. If the item category is wrong, pricing and delivery are merely symptoms of the disease. Mental model to lock in. Greater than sales document type equals the contract, process. Greater than item category equals the behavior, execution. The document type agrees to the sale. The item category executes the sale. If the process is right, order created, but behavior is wrong, no invoice. It is an item category issue. Final perspective. Item category is the most powerful control object in SAP SD. It silently decides whether goods move, whether revenue posts, whether customers are billed, whether costs are captured. Master item category logic in SD becomes predictable. Ignore it, and SD feels buggy, erratic, and uncontrollable. Say next when ready.